So we are solving our second question on the initial measurement, and you realize that this is an upgraded version, right? This question has an additional information. So let's also see how we can solve this question. And then you realize that your understanding on initial measurement will be more solid, as I said earlier, right? Stay with me and trust me, by the end of this video, you are not going to have any issue when it comes to initial measurements under IFRS 16, okay? So, question 2. Now, Crunch Limited incurred the following cost in constructing an office building. Are you me? Crunch Limited incurred the following cost in constructing an office building. So these costs are being incurred, right? Now, we are just supposed to know which ones has to be capitalized and which ones are not supposed to be capitalized, right? Which ones are supposed to be expensed. And right now, we understand when it comes to capitalization. So it says that required, calculate the cost of the building, right? That will be included in the tangible non-current assets. And I'm sure you understand why they are saying tangible non-current assets. I've explained this to you, right? So now let's see which costs will be included in the tangible non-current assets. So let's bring our dollar sign. Purchase price of land. So they are constructing an office building, okay? This office building that they are constructing, before they started constructing the building, they had to buy a land. Is that not it? So this purchase price, we are going to include it. So purchase price, purchase of land, of how much? 125,000. We have legal fees. Legal fee is a professional fee, right? So we include it. Stamp duty and other levies to local government authority. Don't forget that they said Crunch Limited incurred the following costs in constructing an office building. So we have to tell which ones has to be capitalized and not, right? So we mentioned that when it comes to duties and non-refundable taxes, we capitalize it. We add it as part of the cost of an asset. Is that not it? So we are going to include the 2,500. Site preparation and clearance. I've explained it in the question 1. So obviously, site preparation and clearance, this is a directly attributable cost. Cost of buildings material used, right? Cost of building materials used, that is a directly attributable cost. Labor cost. So the labor cost is set from 1st January 2012 to 3rd June 2013, and the cost is 75,000, right? That is approximately, I think, 18 months. Then we have architect fees. Architect fees is 10,000. That's a professional fee. It will be included. General overheads allocated. Now, general overheads that are being allocated, right, is part of the excluded cost. Okay, so we are not going to include general overheads as part of the cost of an asset. It's not directly attributable, right? So let's look at additional information. Material costs were greater than anticipated. On investigation, it was realized that materials costing $5,000 had been spoiled and was therefore wasted, and a further 7,500 was incurred as a result of faulty design work. Don't forget that I mentioned to you that any form of losses that is being incurred before the asset was ready to be put into use, or before the asset was put into use, is not considered, right? What it means is that this material that we are seeing as 50,000 includes this sports 5,000 and additional incurred cost of 7,500. So for us to know the actual cost that must be capitalized, we must subtract this 5,000 and 7,500 from it. And that makes sense, right? Now, as a result of the above problems, work on the building ceased for 2 weeks during July 2012. And it is estimated that approximately $4,500 of the labor costs relate to this period. So, because of the faulty problem that happened in additional information they are saying that work was put to halt, right? And then during this period of 2 weeks, labor cost was incurred for $4,500. This is not directly attributable because at that point, construction was not ongoing. So we must subtract this from it. The building was completed on April 1, 2013 and occupied on July 1, 2013. Now we look at the labor cost here. They said the labor cost is from 1st January 2012 to 30th June 2013. What it means is that this 75,000 includes everything they've spoken about here. So if the building was completed on 1st April 2030, it means that the remaining 2 months or the remaining 3 months here, so April, May, June, shouldn't have been part of the cost of the assets. So it means that we have to prorate the cost of the asset. Is that not it? So that we will know how much was actually incurred, what was directly incurred as cost of the assets or during the construction of the office building. Is that not it? So let's take our legal fees. So legal fees. I have a nice handwriting, right? So legal fees, we have 5,000. Good. Then stamp duty. So we've established this basis. Stamp duty, that will be 2,500. Now site preparation, site prep, that's 9,000. We have cost of building materials used. So materials. Don't forget, there's an adjustment that must be passed. Is that not it? So the materials, it should be 50,000 here minus 5,000. Sorry. Minus 5,000. Then minus 7,500. You agree? So 50,000 minus 5,000 minus 7,500. That will be 37,500. So 37,500. I hope you are staying with me. All right. Then labor cost. Labor cost. So this amount of 75,000, right? They said it's from 1st January 2014 to 30th June 2013. Is that not it? So what you are supposed to do is that you must find the what do you call it? The 15, the proration, right? So you have to prorate, right? So we are going to find 75 times 15 out of 18. Is that not it? Then after we subtract the 4,500 from it. So we established that basis. So 75. So 15 divided by 18, right? Times 75,000. That'll give you 62,500. Then minus 4,500. What are we having? We are having 58,000. So we should have 58,000 here. 58,000, right? Then we have architects. There is a professional fee. So architects. So architects, that's 10,000. Then general overheads. Do we include it? No, we don't include it, right? We don't include general overheads because it's not directly attributable cost. So what it means is that the cost of the assets becomes 125,000 plus 5,000 plus 2,500 plus 9,000 plus 37,500 plus 58,000 plus 10,000. Right? So we end up getting $247,000 as the cost of building. Cost of building. I hope you are with me. So this is what will be shown in the statement of financial position. So that brings us to the end of our question solving on initial measurement. If you like this video, kindly hit the like button. And if this is your first time joining me, kindly hit on the subscribe button and turn on your post notification so that anytime we release a video, you'll be notified, right? I'm also available for, consultancy and then online tutorials. So in case you would like to have a one-on-one interaction with me, can you find my email address below? Text me, send me a mail so that we can have a meetup. Okay. Until then, have a nice day, you all.